Yes, we are live now. Thank you so much, everyone, for joining today. And I welcome you to Boardroom Broadcast, your monthly series where board level discussions happen live, online, real time with actual board members and business experts from global companies. If I may request all speakers to please mute their mic because there is some kind of noises there. Thank you so much. So let me welcome you again. Welcome to Boardroom Broadcast, your monthly series where boardroom discussions happen live, online, and in real time with real board members and business experts. Now, this is not just another panel discussion or a business talk. Each episode, we will pick one specific topic which is relevant for board and business and all stakeholders for achieving business success, ensuring survival, and delivering outstanding performance for your business. And I don't have to mention that 2026 is one of the most difficult and most dynamic and most special year for us. And before we deep dive into this one, I want to make a disclaimer that views shared during this boardroom broadcast are individual opinions and do not represent the views of any organization or company anywhere in the world. And one more important thing, we are streaming live on LinkedIn, YouTube, and Facebook. So from wherever you are joining, if you have any questions, please write in comments and we will try to take those questions online or offline with our experts. So let's get started with this exciting one, first time happening in the world. Today's session is about board at risk, geopolitics, resilience, AI, and trade disruption in 2026. That's an exceptional year for us. And we have a wonderful board of directors sitting with us today to help us navigate this journey. I would like to introduce them. First of all, we have Mr. Siddhar Balachandran, and he is the honorary chairman of Indian Business and Professional Council, IBPC, executive chairman and CEO of Buimerc Corporate Limited, and recipient of the most prestigious award, that is Pravasi Bharatiya Samman 2023 by Government of India. He will also be discussing with us about the geopolitical impact on business. Our next expert is Mr. Kumar Varsani, founder and CEO of MSBC Group, global AI expert, and I'm a big fan of his AI work. So he'll be exploring with us AI and digital transformation. Our third guest is, he's expert in IT security and cyber security, Mr. Hariprasad Chede. He is a chief information security officer from the banking industry, and he'll be discussing with us the rising cyber threats landscape in this region. And our fourth expert is Mr. Sandeep Sharma. He's a group and the global procurement international market supply chain expert. He will be sharing with us the global support and supply chain disruption, which is like critical for all businesses. So thank you so much, everyone, for joining us today.
Thank you, Neetu, for this opportunity.
Thank you. Thank you. Now we'll start our discussion because everyone is waiting for this one. So most boards still think that geopolitics as a background noise, something to be updated about, but not to be used as a used to be define the strategy. And now when we see the sanctions coming up, trade war is there, data localization, laws are there, and the regional conflicts are there, which is affecting how the companies operate, from where they source the data or the products, or they manufacture or raise money. And the boards which used to talk about what is our exposure to this country, now the question has entirely changed. Now they are asking what is our exposure to this political system, this jurisdiction, or this alliance, or this regularity block. So the question the boards ask has changed. And for that reason, I would like to ask all our panelists one by one. I'll start with Mr. Siddhar. Many boards used to say that, and now they are saying it even more, that this is one of the most volatile decade in decades. So what assumptions that board held 5 years back, which is dangerously outdated today from the geopolitical perspective?
So thank you, Neetu. A very profound question. I think I'll answer this on just as succinctly as possible and on two levels. I think a boardroom, I think, is nothing but a collection of opinions, right? We have extremely capable and strong people giving opinions on an equated platform, which is regulated as well. So I think the relevance of the strength of those opinions has increased manifold and is increasing continuously. So it is very difficult for a boardroom nowadays. The biggest challenge for a boardroom is to complement each other today. Earlier, it used to be reasonably seamless in a high-functioning board. But today, I think to get those opinions away from a social media perspective, which accentuates, as you know, thought processes and makes it more complicated. So I think that is the biggest challenge for the chair of a board and the board itself, to provide a sense of equanimity for a board deliberation. And I think the single most change that has happened in the last 5 years, as you mentioned, the last 5 years, as I think a boardroom used to be specifically for formulating policies for expected boom time and expected recession times, which used to be fairly, not easy, but fairly sort of uniformly predictable. You had these commodity cycles, you had economy cycles. So you could predict when the 2-year boom will happen, when the 5-year stagnancy will happen. But I think after COVID, the 2-year stagnancy that happened, I think it was then that boards actually started realizing that it's not only about the boom and the bust cycle, there's also stagnancy that could happen, which is a very huge game changer in how boards used to think. Cash allocation, the cash reserves hitherto earlier used to be a certain level, but that has definitely increased after COVID to put any sort of value to a predictable stagnancy cycle in the boom and bust, in between the boom and bust cycle. So I think that has been the singular change. And once you have these 3 scenarios, then you need to actually future-proof the company and possibly the industry that the company is vis-a-vis these 3 scenarios. So I think that has been the most relevant change in the last 5 years.
That's quite interesting. And what you mentioned, like the boom burst and the stagnancy, I think sometimes we don't think about that stagnancy phase as well as a board, and we need to think about that one. Thank you so much.
That is what happened in COVID. I think people actually started realizing that, there will be a time where the company can't do anything. So how do you survive? How do you sustain? So that is something that I have actually incorporated into my institution and whichever institutions that I'm associated with.
That's wonderful. And I would like to ask Mr. Kumar that what assumptions do you think from the AI perspective, which was there 5 years back? Now there is a huge change is there, huge shift is there. So what assumptions are dangerously outdated today when we talk about AI?
Yeah, I think I think as it was just mentioned, right? The board needs to be an enabler for the strategy of kind of the forward thinking part. And in our opinion, or in my opinion, it's that short, mid and long-term cycle, long-term being 5 years, mid being anywhere between, 2 to 3. And then your short is kind of imminently in the next 12 to 18 months. And I think typically boards had this, strategy of a linear growth, very well constrained in terms of understanding the industry, governance and governments themselves. And I think where the market has now changed and how boards are now starting to think is that it's not going to be linear, right? We're in a very volatile situation across geopolitics, technology, regulation, cyber risk, supply chain. And these are all separate risks. But what we're now seeing is that these are all compounding together. And so where boards need to really kind of adjust that vision and plan is be prepared for constant disruption. Building the ability to pivot very quickly in certain scenarios, accept that resilience is not just efficiency, but it's now a core source of the business's competitive advantage, to be able to adapt very quickly to constantly moving goalposts around some of those components that I mentioned. And so when a board is coming together, they're looking at various different components of the business's growth. I think the one key factor that hits home for me is always being ready to face constant disruption, because it's not going to be a predictable path of success. Regulation or a single point of efficiency are now exposed. With AI coming into the mix, the speed at which things are changing from various different components, and we'll touch upon this on some of the other topics as we discuss this around regulation, is a key component. So I think my overall takeaway for something that was 5 years ago to now looking at the forward 5 years is a business should be very much ready for constant disruption, especially where the pace of technology is disrupting various different components, as I mentioned, technology, regulation, supply chain, and more importantly, geopolitics.
Thank you so much. Thank you. I think that's very true. The things are changing so fast. We need to be ready for it. Mr. Hariprasad, what do you think from the cybersecurity side? What has changed, which is totally like irrelevant what we asked 5 years back, and we have to ask some better smart questions now.
All right. Thank you, Neetu. All right. Rather, I also take the same agenda like Mr. Siddhar has picked up, pre-COVID and post, let's say. So the evolvement of the cybersecurity, it is purely before COVID. People used to think that cyber means IT. It's an IT security. Now, how that has actually completely changed. It is cyber becoming an enabler for the board. How it is? Because there is a very thin line that is happening between technology risk, cyber risk, fraud management, and resiliency. There are very thin lines between each of them. The board is asking, overlapping, what is cyber, what is fraud? Without cyber, fraud doesn't happen. All right? So the lines are becoming thinner and thinner. So the question is no more about the cyber or something. It is all about how we enable digital trust to our customers. All right? So if a customer is coming to us, are we ensuring that his cyber is taken care, fraud management is taken care, and he will be able to access the services at any point of time without any hurdles? And then the last but not the least is, if something happens, how the business will come up and run in instant of time. The customer expectations is, I wanted to do a transaction at a split of a second. And during that time, the trust, how we enable the digital trust. And Mr. Kumar has given an interesting segment. These are the 4 components which is changing from a cybersecurity, it is moving towards a digital trust. One more component is definitely the regulators are playing a big role in it. If you see that for last 5 years, the amount of regulations related to the cyber or data privacy has increased significantly. It is not only regulation, it is enforcement of that regulation has been increased. Previously, it used to be 3 countries. Now it is to be humongous. Every country is trying to come out with their own regulation. If I wanted to open my services in some other country, I need to be compliant with both the regulations, both the data privacy requirements. So this is how the boardroom discussion has changed. And the second component is the awareness. The board is always ahead of the game now because of the news that is spreading because of the cyber, whatever the adversaries that are spreading on the internet. And we need to try to tell them that if this happens somewhere else, what is in it for me? How it is impacting to us? How is it impacting to my customers? Can I do something proactive? All right. This is all, again, repeatedly say that one, we are moving forward to digital trust.
Very true. That's true. And Sandeep, I would like to hear from you that how do you see from COVID till now how the supply chain has disrupted, the trade has disrupted, and the questions we asked 5 years back doesn't hold good anymore now, like which is very dangerous question right now.
Thank you, Nithun. Thank you, everyone. So I'll just take forward from the comments that has been made by everybody on the panel. The biggest dangerous thing today is there's no trend. Previously, what we used to do, and even any systems do, they take the trend and based on the trend, they extrapolate the things going forward. There's no trend left now. And every time the things are coming up, it must have never happened, and the repercussions are not straight. The repercussions are indirect also, where you cannot match the dots. So a very typical scenario of the tariffs, just taking an example, where there was a tariff war going on across the country, then there was the issue, there was unpredictability, there was a lot of things going on. But on the contrary, there was something parallelly going on, which we have not concentrated on, is because of the the tariff war happening, the entire trade stopped. And when the trade stopped, the container movement stopped. And when container movement stopped, everything started getting blocked. And because of the lesser container and turnaround times, the cost per container started going humongously up. So I'm just giving an example. So at this point of time, you need something which is, again, stated in two words. You talk of resilience and agility. We talk in supply chain every time, that how fast you can be flexible to turn around on the conditions happening at that point of time, and how fast you can make the decision of yours, which has got some justifications and some logic lying behind it. So we'll take this thing, during the conversation. But for me, anything at this point of time has to really do on time at that point of time, because you never know what is going to come, and because of any kind of geopolitical things happening between the countries, what are the indirect effects coming on that? So it's pretty complicated. And when you talk of AI, I'm just talking of AI at this point of time, there are trends that have never happened. So there also, to get a full support will be a very, very difficult thing on this. So
That's true. Thank you so much, Sandeep. And we'll deep dive into further when we have more questions. I have a question for Mr. Siddharth now. When we talk about different sectors like energy, shipping, tech, or finance firms, they had to reroute or reconfigure supply chain or exit market due to sudden sanction or regulatory changes on a very short notice. And companies operating across different countries, they are navigating conflicts on data, on AI, semiconductor, or critical technologies, forcing them into different regional strategies. So now from global, we have moved more to regional strategy. So how do you see this, that many boards are seeing till now they were seeing the geopolitics as a background noise, but now it's a main agenda. And if you were opening a strategic discussion on a board, what are the three questions you would ask management about the three things? First is a market to exit, the second is market to double down on, and the third is partnership to rethink, considering the geopolitical risks.
What was the last one, Neetu? You were sort of hanging a little. The third one?
Yeah. So the three things are market to exit, market to
Yep.
double down on, and the partnership to rethink.
Okay. So again, I think a very profound question. See, I've always believed that an organization, institution, which is what I think we should refer to our organizations, should have a stable core. I think so. For a global firm, I think it's very, very important where the think tank is, ergo where the board and the top leadership, top management sits. So I think that jurisdiction, the decision of where that jurisdiction should be is of paramount importance. Now, the three questions. The first one is which market to exit.
Yeah.
It's very simple. It's very simple. I think as an investor, and as an investor who has exposure to different countries, the first thing I look at is the stability of the political scenario. And not in terms of whether there is a dominant government or a forward-looking government, but purely whether there is the ideal of democracy. Because I believe that for any industry, for any company to thrive, there has to be a sense of ownership for the company into the country, and also for the country into the company. So there should be a mutually positive reinforcement flow. So I think stable political climate should be constantly monitored, and that is something that we do as a team at my primary institution where I'm associated. The second thing, it's a two-pronged answer, which is a correlation of the first one. I think the currency, which is again an extension of the political climate to a certain extent. I think the currency is the key for me. Because if you have a constantly depreciating currency vis-a-vis, if it's different from your holding company jurisdiction or the core jurisdiction, as I said, then your expectation of returns from that country should be definitely inflated. So if it's a Indonesian rupiah, which is a constantly depreciating currency, at least for the last 10 to 15 years, and if it's the dirham or the dollar, the expectation of returns from a country like Indonesia should be at least 5 to 6% more than the expectation of returns from a Dubai or, dare I say, India, vis-a-vis the Indonesian rupiah. And that is my patriotism speaking. India also has a constantly depreciating currency, but still. So these are the two things that we always discuss at the boardroom level. And we also put in contingency scenarios as to every year every quarter when we do the future analysis for our particular investments, because they're reasonably large. We always ask these two questions as to what would the political climate be next year? Is there any upheaval happening? Is there any revolution happening? Which definitely will affect the macro and the micro. So these are the two questions that we ask in terms of markets to exit. The second one is what, again, if you can repeat it, Neetu?
It's a double down in certain market, and the last one is partnership.
So it is again the same. So it is these two questions can be done for the first scenario of exiting if it's in a negative trend, and if it is stable or even forward-looking in terms of enhancement, then doubling down. And the last one, I'm sorry.
Partnership. Which partnership we should nurture more, considering the geopolitical things are changing?
See, that is a very complicated answer to a very simple question, if I can. As was mentioned before, I think the walls have fallen down between countries, between industries, So there was, for example, before the Lehman Brothers collapse, or during the Lehman Brothers collapse, it was only the United States of America who was easing doing the QE, the quantitative easing, by actually printing more and more money. And they did the right thing. So you could, to a certain extent, the other countries could sort of extrapolate themselves with that scenario. But today, you have a scenario where it's happening across the board with every country. So commodity cycles are non-existent now. Economic cycles are non-existent purely because the new cycle has yet to reveal itself. So we will be able to forge partnerships and enhance stakeholder relationships, and the number of stakeholders in every country also has enhanced. So it's not only the Reserve Bank, it's not only the central bank, it's not only the finance ministry, it's not only the regulators that we need to think about. Now it is spread across the board. So everybody has a say in how the investment climate of that particular jurisdiction or country could be enhanced or deteriorated. So it's a case in progress scenario, which makes it all the more relevant that you have a stable core, and the periphery of your organization should be always in constant flux. The future readiness of that particular company will depend on both the extremely stable core and the constant dynamism on the periphery. This is my take.
I love this extremely stable core and then being dynamic across the operations. That's wonderful. If I may ask you one more question very briefly, if you can answer. Usually boards meet around like once in 3 months, but the way things are changing across the globe, do you think they need to meet more frequently? Because 3 months is really, everything will change in 3 months.
Absolutely. So technology has made it so seamless. What I meant is to fulfill, so statutory requirements for every country is hardly a maximum of 2 per year.
Yeah.
Most countries. We meet physically every quarter. However, virtually we meet probably every 2 weeks. So that is again a very thoughtful extrapolation to your earlier question.
Yeah.
The more frequent the meetings, which is possible due to technology, the better.
That's right. That's right. Thank you so much. It was such an insightful answer. Actually, I was just making all those notes. And Mr. Varsani, I have a question for you now. Since like we have spoken about having the very resilient core and then being flexible around it. So boards are approving AI programs worth millions of dollars and often without seeing the full operational and ethical complexity across regions, especially when they operate in different regions. So when a company is operating into multiple jurisdictions, what are the 3 governance failures you would have often seen around data, or it could be model oversight, or it could be accountability? So what are the things that could put them into a very big multi-country liability from AI perspective? Mr. Varsani, if you're speaking, you're on mute.
Sorry, yeah, how every conversation starts. No, I think that's a really important question. We operate, as MSBC across America, UK and Europe, Asia, and I was fortunate to live in California, Silicon Valley for the last 13 years. And one of the key things is when you start to understand how technology is used on the ground, around the communities, around the businesses you're serving in that country, there's a lot of regulation, data protection that you do need to be aware of. And, somewhere in the world, there's a board that gets together and green lights the approval for an AI program to say, right, we're going to launch our services in, America as an example. And even within America, each state has its own local regulations as well as the federal regulations. So you've almost got like a double-tiered approach within America. And you see similarities of that in the UAE as an example between free zones and mainland, as well as UAE in general. But the top three hitting home components for me, number one, is data sovereignty blindness, right? I think when boards approve AI programs, they need to understand the laws of that local jurisdiction of where their product or service will be used. And when we talk about AI specifically, we're training or we're operating models across borders without, in some cases, clarity on what that local requirement is, right? It could be GDPR, it could be consent, it could be how we process information within that model. And so the exposure or the risk that the board needs to understand is, what does each one of these jurisdictions pose as risk to the service or the product? And how do we mitigate that risk in the correct way? Because in many cases, when you're building software technology, you're in many cases having a multi-tenanted environment because you've got users coming from all over the world. And you need to be ensuring that you can provide the right type of risk management around data, around processing, around compliance and regulatory requirements for that local jurisdiction. So I think the first is, an element of blindness to it. The second is there's no clear model ownership. I think we've seen this a few times where a lot of AI systems that are being switched on, they're a mix between model providers. We have vendors who are actually then, packaging those models into software. And then you have the business units of ultimately your customer who's consuming the output from this. And so when a model fails, or it produces a bias, or it drives a bad decision, no one's clearly accountable for this, right? I think the accountability starts at, the entity that has sold the technology to the client. But if the board can't answer who owns this model end to end, basically regulators will step in and hold the necessary parties accountable. And we've seen this a few times. An example, there was an airline that provided some pricing advice to a consumer, and it ruled in the favor of the consumer to say, well, if the model provided an inaccurate output and you are providing this service to an end client, you hold that responsibility. Now that client, pretty sure, is using another model from another vendor. We have various different model providers. For the sake of our own risk, we should mention them. But there is a lot of bias. There's a lot of inaccuracy of information being provided. So that's probably the second, which is ensuring who owns certain decisions or outcomes based on what you're providing. And the third is really around organizations are heavily reliant on partners and vendors to deliver AI technology into the firm. Some companies have capability in-house. Many are using third-party vendors. Could be a product, could be an engineering company. And what this poses when you're using a partner or a vendor is to be able to understand the model's logic, the risk outcome, because what you end up seeing is this becomes a black box problem. If you can't explain the decision-making tree of how your model provided an answer, then it needs to be handed off to a human. In some cases, it needs to be switched off. But ultimately, you're not in control of the risk at that point. And boards are very blinded by this because, AI is a black box. And if you don't have correct internal governance or control on its decision-making, then technically you don't have control of the risk. And if you're dealing with external jurisdictions across different countries, then your risk exposure is quite big. So I think, across data sovereignty blindness, no clear model ownership, and kind of vendor-driven oversight, these are the three things I would, promote boards, promote business stakeholders to get a better understanding of when launching a product or a service, certainly when it's AI powered by models, in different jurisdictions, because ultimately this will impact three things: reputational damage, operational risk, and subsequently your ability to actually harvest a successful launch of your solution in that country if you really don't understand the localization of who your users are and where they're consuming your service or product from. And just one final point I'll add, which I think everybody that's watching, as well as everybody on the panel as well, is traditionally what companies have done is try to transfer that risk. And the transfer of risk typically would have been a nice big contract, and you sign it at the bottom and you're understanding what you're signing. Fast forward, that's now scrolled to the bottom and hit I agree, and suddenly you've accepted something that you're not necessarily sure what you've accepted. And so that transfer of risk of solutions that are coming to the market, to the end users who consume them, this is not financial advice. You should use this with caution. We can't guarantee that every answer we provide is 100% accurate. This is a mechanism of reducing liability, but ultimately the reputational damage or the operational risk still exists. And so, I think that's probably the three key takeaways for me, and certainly for any board or any team looking to understand kind of what could be the blindsidedness from this. I would say it's those three things.
That's very true. And when we talk about like the vendors, actually, there are sometimes 4 or 5 layers of vendors are there. So nobody knows who's ultimately owning that one. That's a big challenge, yes. Mr. Hariprasad, I would like to ask you something very like the biggest threat for everyone right now. Board packs are full of cyber dashboard, and yet the incidents still catch organization like off guard. Ransomware, if we talk about, so around 32% were there in 2025. It increased by 32%. That was like 7,419 recorded attacks were there. Unrecorded, we don't know about that one. And it's happening across all the sectors: aviation, robotics, utilities, telecom, everywhere it's happening. So, as a board member, if you have to strip away all the technical slides and just have to keep only 3 uncomfortable questions, then what every board should ask to expose the real business continuity threat which is related to the cyber security. So removing everything, all frills we are removing, just asking 3 critical questions which will impact our business continuity.
All right. So, so I go back to the basics, actually, to be frank. The first and foremost thing is, do you guys know your crown jewels? What is that? If something happens to that, the business will crash. If something wrong happens, how fast I'm able to come back. All right. So whether the crown jewels can be a services, can be a critical data, or a critical functions, if it is IT OT. So we need to identify those things, how capable as an organization, if something wrong happens, we are capable to get back. First and foremost thing. The second one is, we're talking about the board. How many boards will be having a cyber advisory? Right? Whatever we say, when we discuss about the cyber, apart from the risk, there will be a technology related items will come into picture. It's the high time for the boards to have people with the cyber knowledge background to give the right advisory at the right time. Third, but not the least, is, are we compliant? Okay, so these are 3 different things. But let me tell about the current spectrum of the attacks, how it is actually doing. I'll give a very small example. Last 24 months in my career is the fastest ever change of technology is happening. Whether it is talking about the AI, whether we talk about the quantum, whether we talk about some API usage and all. Let's look at it from the hacker's perspective. Because when we talk about the AI, we had a long discussion with the Kumar, as mentioned, about what all we need to follow in terms of, so that enough governance and bureaucracy around it so that we can start the project or we can delay the project. But the hacker is wearing a different hat. For him, he need to ensure that first of all, the hacker need not to be a technically advanced person currently. because of the agentic AI or the AI capabilities, he can do the attacks much faster and much scalable. If he has one particular script, he can run thousands of attacks at one time.
Yeah.
And the third, but not the least, is very, very targeted. Neetu, give me 10 minutes, 5 minutes, I can imitate as you and talk like you and show like you.
Yeah.
Impersonation.
That's right.
So if these three are the clear weapons for the adversaries, what you have in your way, first of all, try to prevent it. And then if we are not capable to prevent it, do I have capability to come back to the business if something wrong happens? Okay. So capability to something wrong happens, people take it very, very lightly, to be frank. When is the last time a board has a playbook run with the cyber attack scenario? If some of the board members personally impacted due to the cyber adversaries, what will be his thoughts in the boardroom meetings? Whether it will be influenced by the adversary, right? So because of these kind of weapons that are available, accessible, and these are accessible as a service, it's not necessary. I can just hire somebody for $100 or $10 itself, right? And with regards to the patterns, still, if a customer wants a transaction to be happened in a second, do I have a capability to stop that and withdraw the funds within that second? Do I know if some transaction fraud happens, whom to call, which regulator to call? Do I know which law enforcement team to call? What is their contacts? Do I know in the bank whom to call immediately? Do I know my corresponding bank if the bank did, so that the money doesn't disappear once it transferred also? So these are the various kind of things happening. And though the attacks are the same as the earlier, as the same old ones, the way, the speed, the effectiveness of the attack, that is increased significantly. And this last one I'm telling is time to catch up. I've seen in the lot of board members saying that we have so many patches which are not need to be addressed. There is to be a cycle between a weakness that has been released by the vendor and a weapon or the exploit to attack that weakness used to be more than 6 months. But now that is coming up to 30 days or 15 days or 2 days. In 2 days, can I patch it?
Exactly. The frequency has increased.
Right? Because we are talking from the end user. Do I have that much manpower? Do I have a contact with the third parties, which is very much important in this case, who can come and help me to accelerate this? So actually there is a burst in the way the cyber and frauds are increasing, and it's a high time the boards need to think about an advisory to the board in cyber perspective, and what is the crown jewels and what is my resiliency capabilities.
That's wonderful. And I've taken the note of the point that cyber attack scenario. I think most of the boards are not doing that one. So that is something we have to think about. Thank you so much, Hari. Mr. Sandeep, I would like to ask you this question. On paper, everything looks very beautiful. The supply chain looks diversified, but practically there are few nodes or few ports or vendors are there where the entire system depends upon. Like one of the studies I was going through, and it says that the top 10 container ports handle around 30 to 35 of all the good global container traffic. Like if we take the example of Shanghai alone, it is 48 to 50 million TUs was there in 2023 and more in 2024. The same way Singapore, if we talk about 38 to 40 million TUs are there. That means that if there is a disruption in a small handful of ports, it will create the disruption into entire supply chain. So when you are sitting with the board and you have just 1 hour, so what is the very specific question would you ask, like this, the single thing which could disrupt the entire supply chain of the company?
Thank you, Neetu. Neetu, these all things are really very interrelated. It's not only about the logistics, it's about the 360-degree supply chain, then the strategy all over. Because when you talk of a typical logistic scenario in terms of the movement of the containers, you need to have your vendor bases evaluated and reviewed, because you should know where the vendors are sitting. And it's not a matter of only this container movement. It's a matter of commodity. It's a matter of political disruptions. It's a matter of economic trade restrictions and also regional impact. So the number of variables are increasing continuously, and which is where it becomes very difficult to match the dots and create an inference to take a decision. So basically, what actually, and if you see COVID and if you see the aftermath of that happening, including the Red Sea events, there has been a substantial impact on the container movement because the container movement has been restricted. Container movement has been from certain ports, and like you say, US, Shanghai, Singapore, these are like the bigger ports where either the direct container movements are happening or it's a indirect means, cross dock movements are happening from there. So the biggest thing, if you see 2019, I think so. Okay. Or it was 2018 or 2017 when the Hanjim got bankrupt. It was one of the biggest thing that happened. There was some 100,000, 200,000 TUVs lying on the ports, and there where the whole scenario of the shipping, the shipping industry started changing. The shipping industry started merging, and there was a consolidation and merger across, because they have really gone through a very, very bad period up till 2018. And based on that, there was significant only few players that were left. Otherwise, everybody was wiped out or they were merged into something. Now, based on this entire thing, if you see, there has been the shipping coming out of certain places. But definitely, it's all not only shipping. It also depends upon where your vendor bases are there. So when you talk of 2020 COVID, everybody reevaluated the supply chain in terms of diversity. Okay, there was a contingency plans on supply chain that was done. Okay, and based on that, the entire planning for the next 3 years was done or 4 years was done. But then nobody was knowing the commodity issues that came in 2022. It was very, very big time. Okay, nobody was knowing then the regional conflict that is going to happen, and also the repercussions of that on coming, thing. So when you are literally sitting with the board, the first thing that comes is how resilient is your supply chain. Again, I'm coming to the same word. And previously we used to have a plan A and plan B. Now it's a matter of plan C. That if these two fail, then what is the option now? Okay, because the repercussions of the things are happening on hourly basis now. It's not months, it's hours. And if you've seen, there is political things or geopolitical issues happening in silos, but it has major effect on each other. So this is an important point at this point of time. And there where you need the boards to be more flexible, more, the power vested in the second line of the board should be much higher. My thinking is always that. They are the decision makers, they are on the ground. They can definitely get it to the board and say that with the justified reason as to what is going to happen now. Because one decision will remain true for tomorrow. I don't think so. Now. And when we are talking of we are sitting in the Middle East region, which is in the center of the world almost. There are too many permutation combination to create a 100% influence with 100% probability rate. I don't think so. And in last 4 years, I've seen this continuously happening. Lot of things still works on gut feelings because the whole system don't have trends and data available to create an inference out of it. And that makes it more unpredictable, more risky, and more complicated. So I hope I've answered your question.
Thank you so much, Sandeep. And that completely makes sense. I love what you mentioned as a plan A, B, C. We need to have 3 levels of plan now. Thank you so much. And I would come to Mr. Varsani again, like I'm asking him. If you can give one advice to our board members and CEO and CXOs from AI perspective for 2026, what that would be? You're on mute.
Apologies.
So,
I think the key takeaway for me would be the next decade is not going to be rewarding organizations that are efficient. I think it's going to be rewarding the most organizations that are prepared. Boards must move from oversight to active risk ownership, from dashboards to decision-making discipline when using AI within the organization. Technology, geopolitics, supply chains, they are not just board level issues because there's a level of value chain that exists behind that. And I think it's very important to understand that risk and own that risk, and more importantly, be prepared for it. There's a few things that I wanted to say around, when AI is being used for decision making or being used as a service for customers, you need to understand at what point does it cause, irreversible harm or bad moral judgment or breaches regulatory liability, right? And there's 3 specific components around, if it's affecting people's rights or livelihoods, there needs to have a human that can sign their name to that decision, right? Hiring, firing, credit denial, legal enforcement. AI can recommend, humans have to decide. And the same goes for strategic bets, right? Whether it's making investments, acquiring businesses, national level partnerships, AI can simulate the scenarios, but again, leadership must own the call. And the last is really around regulatory and safety critical decisions, right? When we talk about various different industries, nuclear, energy, healthcare, transport, AI can support, but again, humans must be the final authority behind these decisions. So, the last 3 takeaways I would leave is named human accountability for every AI system, clear escalation paths when AI confidence drops, and documented decision-making logs where, humans have overruled AI decisions or accepted AI advice. So preparation, be prepared.
Yes, I simply loved it when you mentioned 2 things especially stayed with me. One is that be prepared, like documenting who takes the ownership in the ethical part of it. Some decisions or something can be done by AI, but still we will decide that we will do it considering the ethical foundation of it, not just because AI can do it faster, but we will do it in more humanized way. So I love that part. Thank you so much.
Thank
Mr.
you.
Siddharth, I would like to ask you if you can give one advice to board members, CEO, and CXOs, which they can use for 2026, what that would be. You're on mute, so you have to unmute.
Apologies. Very simple. I think the composition of the board has become far more important than what it was. I think 2 people necessarily have to be there on the board. One is a macroeconomic perspective, so preferably somebody from the academia who gives specific theory which can be interpreted into whatever practicality in terms of policy execution by the rest of the members for rumination's sake. And the most important role on at least boards that I'm part of or create is the devil's advocate. I think that particular role is becoming more and more relevant. It is very, very, very important to have a forced pessimist in the entire set of optimists that generally a board has. So this, the questions have to be hard. Questions have to be asked, and answers have to be recorded, discussed, and only then the policy should be implemented. So this is probably my 2 bits of how a high functioning board should be.
Wonderful. And when you mentioned academics, actually, I was not expecting it. So that's something made me think, okay, yes, we can have that person. And I love this devil advocates part, because a few days back, I did a post about that constructive conflict within the boardroom will save your face in the market. It's better to have conflict in the boardroom rather than facing problems in the market. Yeah.
And it is
And on
better
a
to
lighter
simulate.
note, actually, in our family, yes, please.
It is better. I mean, it is far better to simulate something like this rather than, it coming from unknown quarters.
That's
So I think
right.
that is
That's
something
right.
that
And I think,
should do.
yeah, and everything is coming to the scenario planning, actually, the thinking possibly what could go wrong. And we just simulate it before, even if we go live with that one. And I was telling on the lighter note that I am full accelerator and my husband is full brake. So I think he's onto the pessimist side. He starts everything with no, and I start everything with yes. So that's why I think we are able to be together. So our board is having both parts in it. Yeah. And I would like to come to Mr. Hari at this time and ask it what one advice you could give which can save companies from cyber attack in 2026.
Before Hari starts, let me apologize. I will have to leave, but let me congratulate you, Neetu, on such a wonderful compliment of people. I think this is the ideal board.
Yeah.
Each of us
Thank you so much
complimented
for
each
your
other.
time.
No, it's my honor, it's my privilege. Thank you all, Kumar. Pleasure to meet you, and hopefully see you soon, and not only see your building from here. Hari, very, very beautiful answers with clarity. Thank you so much for your perspective. Sandeep, very, very good to meet you virtually. Hopefully, there will be a physical meeting at some point in time. Neetu, you are not only a IBPC champion, you are proving yourself to be a holistic champion. So please keep up the good work.
Thank you. Coming words, such words from you, it means a lot. Thank you so much for your time. I know you're super busy, but you made time for this. Thank you so much.
It's my apologies. Yeah.
Thank you.
Thank you.
Yes, Mr. Hari, what one advice can save companies from cyber attack?
I go back to my old saying again, crown jewels. What lies likely the cyber event that actually materially impact your organization this year? Whether it is a ransomware, that means if you lose some data, is it okay? Which in supply chain, which third-party compromise may hit you badly? Right? Because let's assume that if I'm depending on a third party whose business is mainly on WhatsApp and Instagram, just imagine if both are compromised, they will not be able to do business.
Yeah.
Okay. So what is that they're talking about? And if that kind of event happens, who has an authority to shut down that service? Whom to contact? Which regulator to contact? Do we know? It's not about writing on a document. Do we have this in the muscle memory? Do we have those simulations are done for the board to take the decisions at that particular time?
Yeah.
And the last, if my key system doesn't work realistically, what is my alternative? And how long can I live with it? Okay, I know this, I'm not trying to threaten or making people fear for this, but we need to ask ourselves, how prepared are we if a cyber attack happens?
Exactly.
Okay,
Yeah.
that's what Neetu from my side.
Thank you so much. And this is
Neetu,
such
you're
a
mute.
basic thing actually. When we
Neetu,
were
you're
very
mute.
young, am I? No, I think I'm not
Still.
mute. Are you not able to hear me?
Okay,
Are you able
sorry.
to hear me?
Maybe.
Okay, yeah.
Yeah,
So I'm
we
saying
can
that
hear
when
you.
we were young and if the earthquake is there, they used to say, just my mom used to teach us, you have to go under the table and all. So it's a basic scenario planning. But I think somewhere in hurry, like while studying something, we forgot all those things. Yeah. So I would like to ask Mr. Sandeep now, what is one advice if you could give to our audience, which will help them from the supply chain problems? Like, of course, few things are out of control, but what they can do, which is controllable.
So,
You're on
what
mute.
advice?
Uh,
No,
yeah.
no, what
Yeah,
advice
we are
I
able to
can
hear
just
you.
share. Maybe the advice I'm giving may not be okay for tomorrow, but anyway. So what advice which I can give at this point of time is, uh, do not really bound yourself with some thinkings. Evolve every day because every day is new. Okay. There and sometime, I'm sorry, like maybe some of the people will not like it. Sometimes gut feelings work beyond systems. I've seen this in last 5 years. Gut feelings and information and the inference of your expertise and your experience sometimes work well because the system don't have that trend. The system doesn't know the trend at all, that what is going to
Yeah.
come in. So, and when we talk of a global supply chains, there is a huge amount of unpredictability with risk. But what is that risk? Is this risk a monetary risk in terms of a bottom line hit, or is this a is this a risk which can be a business disruption or a business closure? There are a lot of times when you have to take a decision between one of them: business closure versus monetary hit. Okay, so that's a very important thing. And the third thing is, make a long-term plan for sure, but then put it into a segments that is easily flexible to change. And the last one, which I think so I've heard with both of my August, you know, is plan for tomorrow and keep your plan flexible.
Yeah. Thank you
So
so much, Sandeep. The few things which have predominantly come out from this discussion is that we need to have a very focused core, but we need to be very flexible with the way we operate. We have to be open for new ideas and we have to be a little pessimistic. So, doing the scenario planning from geopolitical or AI or the cybersecurity or supply chain perspective is so much necessary. Sandeep, what you mentioned, actually, I was looking for one of the books, which is the Subliminal book, is there. It talks about exactly the same thing what you mentioned. Our subconscious mind can read the scenarios and data which still the AI or the data or dashboard is not able to show. So sometimes it's good to just believe in our gut feeling and go ahead with that one.
So,
Thank you
Neetu,
so much for your
I'm
time
not able
today.
to
It
hear
means a
Neetu what
lot.
you're talking, except remaining all what they're talking, I'm able to hear except you, Neetu. Somehow.
Oh,
You
okay.
might be put in a
Okay.
loop, something.
Maybe there is some
It's
issue,
okay.
I think. Yes. But thank you so much for your time. Thanks a lot.
thank you,
Thank you,
Neetu.
Neetu.
Thank
It
you.
was
And to our,
amazing.
thank you. And to our audience, I want to say that next month we are coming with the boardroom broadcast for family business. So stay tuned and I'll create the event so you can write your questions there. And we have very good experts who will be talking about the family business and their challenges. Thank you so much. Thanks. Bye.
Thanks. Bye.
Thanks a lot, team.